Right now, a quiet coup just happened in Silicon Valley. The tech giant you probably use every single day, OpenAI, was just dethroned as the most valuable artificial intelligence company on Earth, and they were beaten by a rival you might rarely interact with. But here's the kicker. This new king is making double the money with a tiny fraction of the users. There is a massive, hidden financial web spinning behind the scenes right now, involving secret corporate structures, private credit, and the sudden birth of a near-trillion-dollar empire.
On May 28, 2026, Anthropic quietly secured a staggering $65 billion funding round. That capital injection launched their post-money valuation to an unprecedented $965 billion. It officially pushed them right past OpenAI, cementing them as the single most valuable dedicated AI company on the planet. And honestly, how they managed to pull this off completely rewrites the rules of tech growth.
The difference really comes down to one core strategy. While OpenAI was focused on capturing 900 million consumer users, which is a massive footprint that requires ungodly computational overhead just to keep free chatbots running, Anthropic quietly targeted the high-value enterprise market. They are operating with roughly 5% of OpenAI's consumer base, yet they've captured so much high-paying corporate business that their revenue absolutely skyrocketed to $47 billion in less than 6 months.
Traditional tech trajectories, they have been completely destroyed by this. When growth equity analysts looked at over 200 historic software paths, there was literally no comparison. I mean, think about a giant like Salesforce. It took them 20 years to reach $30 billion in annual revenue. Anthropic hit that exact milestone in less than 3 years from a standing start.
And that massive cash engine drove a 15-fold valuation explosion in just 14 months. Back in March of 2025, they were sitting at $61.5 billion. Fast forward to May 2026, and they are brushing up against $1 trillion. This hypergrowth is fueled by one undeniable fact. 8 of the top 10 Fortune 100 corporations are now active, high-paying Claude customers, locking in massive, long-term API contracts.
Now contrast that enterprise sanity with the brutal financial reality of consumer-facing AI. Internal disclosures paint a very different picture for OpenAI. They're projecting a $14 billion net loss this year, which scales to a staggering $74 billion in 2028. We're looking at a projected $115 billion cumulative burn by 2029, mostly just to support free users. They literally have no projected path to profitability until the 2030s.
But that reality raises a massive tension point for Anthropic. Running enterprise models at this scale creates its own vicious loop. Yes, they are highly profitable per customer, but they have to reinvest every single dollar right back into raw computing power. You have to feed the machine. So the ultimate challenge is figuring out how to buy billions of dollars in hardware without destroying your pre-IPO equity.
The solution they found is shadow debt. To survive this insane compute demand, private credit giants Apollo Global Management and Blackstone stepped in. They structured a record-breaking $36 billion debt syndication facility specifically for Anthropic. This move essentially turns computing capacity into an infrastructure-grade asset class, making it completely comparable to energy pipelines or commercial real estate. But the real trick is how they hid the leverage. To avoid sitting directly on Anthropic's balance sheet, which would definitely panic investors, this $36 billion is routed through an off-balance sheet special-purpose vehicle. This shell company uses the borrowed funds to buy custom Google and Broadcom chips and then simply leases the hardware back to Anthropic. It magically converts a terrifying upfront capital expenditure into a predictable monthly operating payment.
There's a hidden trap inside that brilliant financial engineering, though. Broadcom actually provided what is called a residual value support agreement. This means if Anthropic's revenue growth suddenly slows down before 2028, strict debt covenants could force Broadcom to absorb massive losses on rapidly depreciating silicon. The entire ecosystem is highly interconnected and incredibly leveraged on Anthropic's continued hypergrowth.
And the hunger for compute is so immediate that they literally couldn't wait for those new data centers to go live. They needed temporary capacity right now. This search led them to actually rent from a direct competitor. Anthropic agreed to pay Elon Musk's SpaceX $1.25 billion per month, adding up to a massive $15 billion annual lease, just to access the Colossus supercomputer down in Memphis.
The industry assumed this was a long-term tactical masterstroke, giving Anthropic a multi-year supercomputing empire. That was until Elon Musk publicly posted a sudden reality check. He clarified it is actually a very fragile 180-day lease, explicitly stating that the short term was SpaceX's request, because if compute gets super tight, they might need the capacity back. This introduces a massive operational risk. If Musk decides his own AI projects need the space, Anthropic could be forced to rapidly migrate giant workloads overnight. While Anthropic is fighting tooth and nail for compute space, this incredible scale of intelligence soon pushed their flagship model, Claude, into a completely different arena. Because of its advanced reasoning capabilities, it became the only frontier AI system approved for use on classified military networks. And that instantly sparked a deep-rooted conflict between corporate safety guardrails and national security imperatives.
The relationship completely deteriorated from there. The Department of Defense sought to integrate Claude into active combat command systems, demanding the model be available for all lawful use. But Anthropic absolutely refused. They would not remove contractual prohibitions preventing the AI's use in fully autonomous lethal weapons systems. Anthropic insisted on strict red lines, and on February 27, negotiations completely broke down.
The Pentagon's position was that corporate safety rules absolutely cannot dictate military operations during global crises. When the standoff peaked, the Trump administration took federal action. Defense Secretary Pete Hegseth labeled Anthropic a supply chain risk, ordering military contractors to cut ties, and the White House issued a directive banning the use of Claude across all federal agencies.
Anthropic immediately fired back. They filed a massive 48-page lawsuit claiming First Amendment retaliation. This escalated directly to the federal courts, where a U.S. district judge actually ruled in favor of Anthropic, issuing a preliminary injunction to block the federal ban. The judge explicitly called the administration's actions Orwellian and punitive, completely rejecting the government's arguments.
The Justice Department tried to argue that because negotiations were so tense, they feared Anthropic could install a kill switch and sabotage military networks. While the judge rejected those sabotage claims, the legal war is far from over. The D.C. Circuit Court actually denied Anthropic's motion to lift the designation entirely, citing that forcing the military to use an unwanted vendor during an active conflict with Iran presents an unacceptable national security risk.
Yet, as this geopolitical friction burns in the background, Anthropic's core business just keeps accelerating. Blackstone is now actively pushing Anthropic's agentic tools into hundreds of mid-market businesses. They are fundamentally changing everyday office workflows and automating administrative tasks for thousands of regular employees literally overnight. It perfectly underscores the new reality. Consumer popularity is vanity, but enterprise utility is sanity.
All of this, the financial engineering, the unprecedented revenue ramps, the intense legal warfare, is building toward a historic breaking point in the public markets. Right now, there is roughly $8 trillion sitting in conservative money market funds. That is a massive pool of institutional and retail capital just waiting to flood directly into foundational AI developers.
These forces are setting the stage for an impending wave of mega IPOs that will test the absolute limits of the AI boom. We're looking at target valuations of $1 trillion for OpenAI, $1.2 trillion for Anthropic, and $1.75 trillion for the combined SpaceX XAI entity. Public investors are about to be forced to choose directly between radically different corporate structures, varying risk profiles, and entirely different philosophies on how AI should actually be built.
But as private tech giants continue building systems that act as both public utilities and the absolute backbone of national defense networks, a much larger tension remains unresolved. When an artificial intelligence system becomes powerful enough to literally run the global economy, what happens when a private company's safety rules directly conflict with a nation's military survival?
An investment in knowledge pays the best interest, so why not invest in this channel? Click like and subscribe for more.